No, we would have to use Zoom for that. Okay. But there's also timestamp down here. So if there's something that I say, you can just look at the timestamp and mark a note of that and then go back. But we're about to open in a few seconds. Um, we're still stuck within this range up here. This is okay. So I'm looking at the daily. This is Nasdaq on a daily. Looks like we're just bouncing within this volume imbalance right here. That's where the body seems to be opening and closing as we come into this daily change in state of delivery. Um, and then we have dollar coming into this fair value gap, inverse fair value gap pretty nicely from all the way over here. Yeah, the dollar. Yeah, this is something ICT taught about. If dollar's going down, index C should be going up, and if dollar's going up, index C should be going down. And if they're moving in the same direction, kind of like how they are here, that means that it's risk on, be careful, don't trade. But when, yeah, and see how dollar moved into this change instead of delivery up here? So is Nasdaq and ES moving into this daily change instead of delivery, except for YM. So I think that's noteworthy. Here we are, 4 hour, one of your favorite time frames. Yeah, yeah, you do, as well as the daily. So on the 4 hour, we hit this four standard deviation, but this is on a different time frame. But looking at this fair value gap here, we hit that yesterday, perfect to the T, or not yesterday, but Tuesday, and now we're just consolidating between this range here. And I drew this out here. This is like some retail trader. We're entering into a flag. What is this, a bull flag? I don't know. But eventually we will get a breakout in a specific direction. Um, I don't know what direction that'll be, but once this is broken out of, then we can look to determine what the next draw on liquidity will be. Looking at the hourly, again, going over here, we come right up here into this fair value gap, matching what we did on the 4 hour, and looking at our marker maker model. We always want to understand where we are on the curve. So here we are, sell side, buy side. Yeah, and that's a possibility. And then, here we have our kind of like our manipulation leg. We run up stage one, run up again, stage two, then we just accumulate. And now we take off. Yeah, it helps you make an informed decision, without a doubt. Right. So you're saying if we're in a buy model, then we should look on the 1 minute while it's expanding to take on um, a bullish position as it's expanding. No, so what you're saying, I hear what you're saying. I think I could do a better job at explaining it. What you're saying is when we're in a buy model, we should be on a lower time frame looking for the same thing, looking for a market maker buy model to enter into. Right. It just went, I mean, it balanced out this fair value gap on the sell side of the curve. hmm Like right here, buy side. Okay. Yeah, it's a possibility, right? Yeah. Buy side liquidity is above here. Yeah, right here. Right here. On this side? On the right side? Okay. Yeah, this is usually silver bullet stage two. Yep. Down here. Right. Yeah, yeah, within here. Right. Yeah, you're using the market maker biomodel as the basis for identifying an entry. All right. Yeah, I mean you're getting it's clicking. Correct. Yeah, let's take a look at it. Um, 15, huge sell-off, and just as I drew out, I think we might be coming down here for these lows. Let's look at this over here. Range. We're still in the range. Yeah. Yeah, this is uptrend. Yeah, this is uptrend. This is a market maker buy model. And I think this might be the last impulsive leg up, if you ask me, because we have stage one, stage two, boom, and now we're consolidating. We might get another push up, or we may just start, excuse me, coming down into this inefficiency down here or this daily bullish order block right here. So that's what that this would be my next target. We hit this bearish order block here, then the next one will be this internal range liquidity bullish order block, fair value gap. So that's how I would look at it. Right. So that would be um, we're looking for a short position. Okay. So let me read over this again. It's have a pre-market plan. Okay. High time frame analysis. We did that. So we suppose that we should be going down today and tomorrow. Identify three setups, line that, document the steps, determine will be before we forms, identify consolidation. Okay, all right. Principles to set up. So we're looking at now. So We could be bearish for today. Oh yeah, but I don't want to do that. I want less. I want naked charts, remember? Oh, like that. Yeah, I guess that could work. I'm just gonna keep it the way it is right now. Uh, I measured on the 1 minute. There's a last order block in his down leg. So remember, according to the market maker model, it's consolidation, expansion, retracement, or we expand down and we consolidate. And so I took this last order block here, right here, and read like 4 standard deviation. Took out these lows down here, um, and we have these lows over here from yesterday morning, or from this morning. These are London lows down here that we could be hunting for. So, what I like to do on all time frames, I know we don't have that much time to start off the day, but I usually look for a market maker model on all time frames. And here we have a good one here. 4 standard deviations up here, 3.5, and that's exactly where we go. So this would have been perfect to short. Obviously, it's hindsight, but nonetheless, we see why this was a good short. Okay. So we're still within the first 15 minutes of the day. Down here in these lows, possibly on the 5. And notice how we still had this low resistance liquidity run to work through. We came down here in the discount of this range here. I like that. Um, if we were to short this, we could look at the 5 minute change instead delivery, which we got. That's 4 standard deviations right here. So I would be the time was at the 9:30 open. Drew to swing up into optical trade entry, as we know. Here we'll look at it on this one. So it's from this high to this low. And we come up here perfectly. Optical trade entry, bearish order block here. And so, yeah, yeah. And so the voice notes I sent you, I, you're real big on uh market structure, and you said like I'll allow market structure to tell me when to get out and when to get in. And so say that before this open took place, and we had these order blocks here, and we can expect a Judas swing, right? And 9:30 is here. One of the things we could have done is taken this fib and put it like here. Be like, all right, where are our order blocks lining up with optical trade entry? We have one here, so this would be a potential short. I mean, I need. Well, we're gonna. You're gonna help me, and I'm gonna help you. Okay? Yeah. I think it is. And that's something that I need to do a better job at acknowledging. I think we have a long opportunity right here. Why the low of this fair value gap here? Um, Although we haven't taken out and I want to respond to what you said, but I just want to make sure that we can we can apply what we're trying to do. So we're in discount of this range here, deep discount. We've had rundown. I consider this a stage one. Here's our stage two distribution, and then down we go. So this looks like a long opportunity. If you ask me where we would take it to, and is the market bullish, we could come up here. This could just be one of those retracements up to here. Um, and let's see if this bearish order block right here will support. So let's just let's just see. Yeah, so here's our five. We would need to change this to delivery right here. We're still early, very early in the 5 minute interval, and we just started the 15-minute interval with the huge fair value gap that's forming. This might be a breakaway gap. The highest that I expect this price can come to will be here, this inverse fair value gap on the 15. So this may be just a retracement. So I don't want to take the retracement. I just want to see where the retracement can go because we're bullish. I mean bearish, higher time frame, right? So this is our 15-minute fair value gap or inverse fair value gap. Kind of lines up with the five. That standard deviation projection goes to like the middle of it right here for standard deviation. So I want to be patient and allow price to run up. Maybe look for a short position in here and take that to the downside. Um, let's look at our fib or OTE. No, here's optical trade entry right up here at terminus of that 1 minute change in state of delivery within this whatchamacallit right there. So if I were to take a short position, put them up here, 10-point stop loss. Now we're gonna refine where we should put this on a lower time frame and then go to target for these lows down here. That's a 60-point move. Let's go back to the 1 minute and understand like this is what I was talking about last night. If we enter in here, what's the probability of price moving up to this bearish order block right here, right? And then if it does do that, then that means we're gonna breach this 15-minute fair value gap right here. So the 5 minute change in states of delivery, it will reduce the amount of trades you'll take because the model 2022, it in most cases, and I should be able to prove this, but I can't. You won't get a 5 minute change in state of delivery because technically this can be seen as a model 2022. Draw on liquidity here, market structure shift when we take this out. Now we come back down in this fair value gap right here and then move up. I don't think it's been 5 minutes yet. We're still 1 minute 23. So let's say that we did come down right here within this 5 minute bearish or bullish order block right here, this black one. We still have a minute left to go, but the entry per ICT would be entered as soon as you get in here. Would be perfect. So that's why waiting on it, in some cases, especially in consolidation, I would say yes. But when the market has a lot of volatility like it is right now, and okay, um, so do you want me to? Let's look at this. So we're in. So our knowns, because this is what we're supposed to be doing. because you're gonna be good at this. Knowns, 1 to 1. We're in discount, right? In discount. We still have the sell side liquidity to take. So in discount, two returns to what time is this? London, return to say BISI, right? This is a BISI slash BPI from London session. Balance price range. You know I can't spell. I know it was. Yeah, I know. I know. I know. We have this 1 minute change of state of delivery projection in confluence with premium, whatever, premium inverse fair value gap, right? And I want to say second stage distro, right? So here's the inverse. That's what the square box represents. And notice how we have a quarterly shift here, quarterly shift, boom. Now we're moving up. See from Q2 to Q3. That was one of the things that we had here aligned with 90-minute quarterly shift and microcycle. I hope you realize you're picking up how quarterly shift works. You're picking it up. You're learning it right now. You realize that, right? Yeah. You see how simple it is? Yeah. And look how we have this market maker sell model aligning. Here's a last manipulation of the sell model right in the Q quarterly shift, right? Plus second stage distro plus I'm gonna call it third stage. No. So return to BISI. This should be three. Ends of market maker sell model plus quarterly Q2 to Q3 shift, right? And then our fourth is that, see that? See, here's our Q shift and the market maker stage one, stage two, do. Boom. And here we have our strong aggressive move down. That strong aggressive move down, that's just the market pulling the lever and say, okay, now we're going in the opposite direction. And then we get this nice fair value gap right here. Yeah. And notice how, yeah, this is here, accumulation. Yes, they are. I'm gonna go back to it. Accumulation. No, she's too high. I'm grateful for her. That's all I'm gonna say, and I'm gonna leave it there. Okay. Because she's taking on the role. I mean, this is challenging as is, and she's trying to respond to everybody. Like that's tough. So, s- yeah. So this here is our 90-minute. It's at 9:45. We have a quarterly shift right here. So we have accumulation, manipulation, distribution, right? And if we for what on the sell model, on the buy model, mm, yeah, those black candles, I wouldn't consider this as a distribution. I wouldn't because it's still within this range here. Distribution is when we come down and create like a swing low. See here, swing low, swing low. That's how I would interpret it. Kind of like this one right here kind of fits it because it goes into this fair value gap and moves up. Okay, so I just want to see something. If we take this entire manipulation leg, 225 is up here, 4 is up here. This lines up perfectly. If we take the entire manipulation leg, for standard deviation is right here. That's perfect. Can't make that up. That short here, not necessarily. It might be early. I mean, all we're saying is we're looking for a short position here. We're not going to go in. We're just looking for a short position here. It will be a setup. It'll be a combination of um, well, we're gonna be selling in discount or in premium near OTE. We could wait for 5 minute change instead delivery if we consolidate. Also, we're looking at quarterly shifts too. That's what we're looking for. What? Say that again? Yeah, yeah, yeah. That, all that, all of that. We're looking for all of that. Yep, yep. We're looking for all of that. 2225 is right here, so I'll move my entry up here just a little bit, and then I'll take a market order, a limit order, rejected. This is the 1 minute. Yeah, because it aligns with the high of this 15-minute fair value gap right here. See, 2.5 lines up nicely right here with the high of this fair value gap. And then we're also, if we take from here to here, um, this is, look, this is optical trade entry right here, right up here. All this is optical trade entry. Why not? Different price leg? But yeah, this is the one that we want because we're still stuck within this range. We're stuck. Here's a low. We didn't take these lows out here, so that means this range is still in play. No? Okay. This would be okay. So that's a 15. Okay. From here to here, right here. Yeah. Uh, yep. Premium coming up to 2. Standard deviation. Fair value gap here. 1, 2, 3, 4, 5 candle run. Perfect. This marks as reversal. Um, so we'll see. Balanced price range. This right. So this here, they wouldn't consider this about. I mean, I guess it could be, but ideally it's like right here. This would be balanced price range. You see how we have some traffic between these two? Yeah, but they're ultimately all the same thing. Um, no, say that again, please. This one right here. Yeah, looks like we're gonna blow. Yeah, blow right through it. So I didn't see any setups here, which is why I don't answer. But I caught this one while we were talking. This one down here. So, ooh, 2.5. This might be our short position here. Say we get in right here. Stop would be right here. 11 points. This is pretty deep in the discount. Let's see. Let's see what setup we can get here. We've taken out these highs right here. Mrs. Foreman, you wouldn't? Why wouldn't you? So we haven't closed it yet. That's the thing. Hasn't been closed yet. And this here, yeah, we blew through this one. This fair value gap here. But this inverse, we'll see. It looks like we are right now. Let's go back to the 15 and see if we can identify a setup. I'm gonna press the button in my demo account. This is demo. I mean, but just look at what we have here. This is a 15 second. This is some accumulation. Run up, took those highs out, came here. This is almost a model 14. All right, so now we wanna, this is where you have to come in, okay, and help. What within this range here would give us bullish tendency to make us stay in a call position or enter into a call position? So you can optical trade entry, fair value gap here and a discount. Which one? This one? This one right here? This one right here? So this is a, so if we're saying if this gets taken out, then we will remain in our position. Okay. What else do we know? What else do we know? We have a bearish order block here. We want to see this supported, right? Since we're bearish. If we run up here, we want this to be supported. Okay, perfect. So, and then we want to make what? New lows since we're short. So, yeah, so as we go down, we want to make more newer lower lows, like here, lower low. Here's a midnight open. We may just come back down here and move back up. So, full disclosure. one standard deviation retracement of this 15. Okay, so now we have an impulse move up. Let's see if this high remains taken. Remains. We want new lower highs to be created. This here looks like low, high, lower, low. Let's look at our five. All right, so this one here. Yeah, we want to target that, right? Okay. So where is our breaking structure here on the five? Looking on this side of the curve. Here? Yeah, yeah, right here. Market structure shift. Right here. Still bullish. This low down here. Because technically we're still stuck within this range here. Okay. So let's look at the 1 minute. So all this was a retracement, and now we're still moving up. So, mhm. So I'm confused about the green candle you said that we needed it to wait for before. Hold on, let me get rid of this. This candle here, this one, this. So what about this candle now? The Sibi, Bissy. So we just hit our 30 point, uh, see, 30, 32, 34 points. Our goal was, uh, but you said you wanted a minimum of 30. Oh, 15 points. Oh, so we just said that. All right, so right now we're at 34 points. I did. I took it here. This is I took the trade. Why? No. See this run up here? Look where it went to. It didn't take out my stop loss. My stop loss is 10 points. This came to like, oh, we got to look at the recording again. You didn't realize I took it? Yeah, I'm still in the trade, yeah. So here we have this is 41 points. This is a good trade. We had 41 points right here. We should have came to this. Oh, I was distracted talking to my partner. This order block right here, right? See, that's where you come in at. Because sometimes I'm looking at this. I'm high, like, oh, 59 points, so we can come all the way down here. No, you take your partial here, right? Okay, so this one, the bodies are within, these bodies here are within this. So let me, because this might just be a retracement up, right? See, accumulation run up. Here, let's look at this really quickly. Trying to tell you, trying to tell you. Here's optical trade entry, boom, 72. Bear shorter block right here. See, this is what I mean. TS price is coming down and it hits here. Boom, take out our fib, get your knowns, or I identify, establish. We already know what our knowns are, but you want to establish what they are. And here's optical trade entry. We can answer in here. We can answer in here. But if price closes above here, get out, right? Because you say if we have a break in structure, we need price to close over the high. So price close over here, get out. And then here's our short position. The soonest would be 62. And then the high here. Look, this is only 5 point. This is a very good trade to get in right here. See? And that's where I got in at. So that's where we got in at, excuse me. So that's good. We want to see this. So I don't need you to trust me. I need you to help each other identify what order flow is telling us. But you, I want to see this fair value gap close through and this bullish order block hold or not hold. So technically, what we could do here is move our stop loss to these sides up here because this is like stage one. All right, so now I'm out. See that? The, I moved it up. You told me to move it up to this first low right here. So we got 34 points here. Let's look at this, and it's still coming down, by the way. Just let you know. So we got in at 75, 75, 75. I'm gonna explain that to you, or should I ignore you like Lumi? Just play it. Just play it. Just play it. Just playing. You still there? Because I would never do that to you. All right, here. This is 36 points, so we hit our goal. We have 74 more points left, so we get rid of this. Oh, let's just take a screenshot because yeah, that's bonds. I'm not. I don't know. I don't know if I'm gonna be there. No, no, no. It should if it's a red folder, 30-year bond auction. I gotta look into bonds and all that stuff. I was looking at it before, but I forgot. Um, okay, I forgot the information. But let's look at this really quickly. You should get your children to do this with us. So premium bear shorter block, we can answer in here. If this supports, then we can continue on. I'm sorry, they hear they hear a lot of like nonsense, right? Yeah, I mean, we just leave people where they are. Yeah, they will. Yeah, they will. That's how it always is. People are quick to tell you what you can do than they are to tell you what you can do. You know what I'm gonna tell people? It's like I am good and you can be good too, 'cause I did it. And they're like, all right, they're gonna be like, what do I gotta do? Watch ICT's videos. I don't get, oh, just watch this video. Watch this video. He talks like I know, but just watch it. You'll understand. Me too, and let's not do that anymore because the because yeah, because what I discovered was that watching his videos is not gonna make me a better trader. It wasn't. Yeah, it isn't. So you wanted me to explain to you this short position here? Okay, I'm sorry for rambling. So we came in on the day down here, stage one, took out these highs here. Then boom, stage two, we take out these highs here. And then this is like our last stage, stage two. And look where we come to. We balance out this fair value gap right here. So this is market maker buy model. And after we hit terminus, we go down to the downside. And what's the market maker buy model? This is the market maker buy model. So stage one, and this will be stage two. Stage one and stage two. Do you see something different? All right. So you want a picture perfect marker maker model. They, Oh my gosh, sorry. I was zoning out. Sorry. I used to do that a lot in school, but go ahead. Can you say that again, please? My mother offered me coffee this morning. No, 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 no. I usually drink my tea, my green tea. But go ahead, say that again to me, please. This one here. This here consolidation. Right. And then we take the last OB, or we could take the entire manipulation line, but I'll take the last OB here. All right. I know. Okay, okay, okay. Okay. We're on the same page. We're on the same page. And we come to 3.5 perfectly exactly here. So this is the thing. Let's say that we're still climbing up and we have this manipulation leg here. We know our terminus is between this range here. Let's look over to the left. What PD arrays will we try to rebalance to or try to get a draw on liquidity? And that's what we have here. Okay. So that's what we have to start training ourselves to do to develop those anticipatory skills. Just like we did down here. Okay, okay. Anyway, so we run up there, then we come down here. Let's look at this on the excuse me, on the five, run up here, and then we hit our terminus up here. We have an order block that we could take the last. Four standard deviation is down here. So we're looking for shorts to line up with this sell side liquidity right here, as well as sell side liquidity down here. These are our points of interest. I want to put this on here. And notice that we have London lows down here that we already took out. This was our manipulation link. So this is our origination, hit our terminus and back down. We're back into consolidation. This is back. So this market maker model here, buy, then sell, it's over. It's over now. Okay. Although, according to ICT and Lumi, for this to be over, we need to displace below this accumulation down here. Right. And so, and so therefore you're saying that we're still bullish because we didn't take out these lows down here. No, I don't. I didn't know that. Okay. Okay. So we come down here and we identified that um we identified that we were coming into a quarterly shift. That was a time element right here at 9:45. We also identified that we had our stage one here, stage two here, and then boom. Okay. And we also know that we knew that we could take this low here up to this high here, and then optical trade entries here, which marks in line with the inverse fair value gap that on the 15. So we're looking to enter in short here, but we wanted some form of confirmation, which we kind of get with this OB here, and then 1.5. We wanted to come up there, but if we drill down to the 15 second, we have this last order block right here that we could take a look at, which lines up with 2.5, and that's where we wick to. So that was my trigger. Also, we took out these highs up here, swing highs up here, and we had like a model 14 right here. Okay. A model 14. Okay. So this is our last accumulation, manipulation, and distribution. That's how I would have looked at that. Um, and then we also have the time element of this too. I do believe we're going into a, yep, so we're going from Q3 to Q4. And we have the strong move down, which on the 5, we failed to close above number one, this fair value gap here on the 5. So we failed to close. I don't want this. Bodies are respecting it. Yeah, we could wick through, wicks they do the damage. And then we have this inverse that we're still within. And so decided to pull the trigger. Oh, by the way, this is the model 14. I know you know what I'm gonna tell, but this is it. You just get a wick, and then you have your constant encroachment of the wick. The next candle runs exactly to it, then reverses. That's what it did here. No, I answered before this took place. So the I answered. It was a combination of this here. We have a 1 minute change of state delivery. This is our Judas swing right here on 9:30 open. This is a nice 1 minute change of state delivery. Look where price goes to. Exactly hits that. Boom. Also, we had the optical trend entry right here. Optical trend entry is right here. Right. So I think this is where I had my short was like right here. 10 points was. So this was the 15. I believe it was. I don't remember. Let me add this thing on it again. Okay, you can give it a go away. So it was on this candle here at 75. So right here. So what got me in it was the fact that we got this strong aggressive move up into optical trend entry, and this was 2.5 standard deviation of this order block right here. So I entered as close as possible to the next draw on liquidity. I'd rather get out for a loss early than get out for a loss late. Why not? On this one? Yeah, I agree. I wasn't okay. I wasn't patient to allow for this to transpire. And okay, Thank you. Yeah, the exit on the short position was it was like right here. Yeah, at the high of this fair value gap. Yeah, I think I think it wants to call for these highs here and then maybe for these highs here. And then we can always do this on the five. And also the reason why I took this was because it's inverse fair value gap on the 15. Like you said, rely on the 15, rely on the 15. So it's okay. 3.5, yeah, this all lines up. So I think we're gonna continue coming up higher. Um, I'm sorry, I was looking at my other screen. Can you repeat yourself, please? By taking out these sides here. So what should we expect here? Should we expect shorts here? Because technically this is run up, boom, stage one, stage two, then run up on the 1 minute, and we're still stuck within this range here. So when you tell me I'm too early, I need to be patient. What should I be looking for right here before I press a button? Okay, so if we don't know, what should we do? Oh, down here in the discount. Yeah. Hmm. Right. Okay. I do. I mean, damn, I mean, yeah, we're pretty good. And also the cool thing about it, if we weren't focused on a retracement, it's technically we were, because like you said, you just said it. You just said it. Where we got out at is where we should have gotten in at. So now we need to program in our heads this right here. Um, it's I don't know where to add this, but it's like if in a short, look for exit to be entry for long, right? If in a long, look for exit to be entry for short. I'm shaking my head. Yes. Yes, yes, yes. And the reason why I'm adding this, another reason, is because we need to be um, not biased, but indifferent to the market. And by having the expectation that we're going to be playing judo, have you done judo before? Judo, you know what judo looks like, right? Judo, it's a form of martial arts, but not really this year. Yeah. So you can talk to your husband, because in judo, you're supposed to use your opponent's uh, energy or whatever to get them off balance and onto the ground, right? That's how we have to look at the market, right? We have to play market judo. We have to allow for this down closing candle to inform us or give us an idea that we want to go long. While at the same time, we can be short here like we were and say, okay, when are we going to get into a long position? And you might be saying, hey, we're short. Why are we looking for a long position? Because if we're looking for a long position, that means we should exit out of this short. Double, okay, so that's what we call this double confirmation. This is what we call a double confirmation. And it'll be, and that's what I got to be better at. I always get the retracements. I don't know why. Oh, that's an easy one. That's not fair. Down here. 1, 2, 3, 4, 5. It was. And it says here's our five counter run down and then retracement. So we caught this one here. We didn't catch this one. We saw in hindsight this was perfect. We caught this one here, we caught this one here, and then you caught this one too. So that's 1, 2, 3. All right, so we caught three trades. So now can we start trading out of the micros or the minis? We got over 100 points today. We can trade minis now, right? Okay. But I thought we were supposed to be emotionless. So is this your short position? We just came right back up topical trade entry. Is this your short entry? We're in premium. We just hit 3.5 of that. Whatchamacallit? It's consolidating right now. On the higher time frame. Yeah, that's something that I need to pay more attention to. So I made a mistake. I went in with the micro or mini. I was supposed to go in with the micro, but this is 20. This is my Top Step account. This is almost 25 points. So I mean, I want to go for these lows down here, but I don't know if we're gonna get there. And I'm just gonna move this right here. If it hits, it hits. Keep it here. No, that's fine. 7 points there. It's fair value gap here. Not much. It's like six. Um, where's the little tool at? So what should we be thinking right now? It's where should we answer in for a call, right? Would this be will this be the area we answer for a call? Let's see how the bodies 20 seconds. Let's see if the bodies can inverse this. And then we have this these on the five. No, I don't see a change to say delivery on the five. I just had to press the button. Okay. No, no, no. Ah, fine. It's gonna be a loss anyways. Yeah, we responded from this and we inversed this, so I think I think we're gonna hit the stop loss, which means we could technically go in here for a call because we just run into this 5 minute fair value gap and we're probably gonna continue moving up. Like right here. Yeah, I think we're gonna come for these sides up here. I'm gonna buy. I'm gonna get back in. Yeah, I'm in for a call. Okay. You're right. I need to reassess next time. No, no, no. That's not the case. Okay, this is the last time I'll do anything like this. My word is bond. So I think these highs is 214. I'm just gonna get out here. Just take this low hanging fruit and be satisfied with that. That's if we can get there. We probably won't be able to get there. Yeah, just one. And then we'll change this over to this here. NMNQ. All right, there we go. This is the micro. I still have that position on. Here, I'll go and take it off because I just switched the charts. I think we're gonna come up for these highs right here. Um, I'll just sit here and just be patient. But you see why I got out though? We could not close below this and be inverse this fair value gap here. Are you serious? There, we're out. Out. So no, this is a trade that we took together. I mean, we saw this one here. We were doing the judo. So, okay, my promise to you is I won't take a trade without telling you next time, okay? Which image do you like most? Yeah, here. Which one do you like most? You like the babies? Where are the babies at? Right here? The little cubbies? Is that because that's where we are in our trading career, where we're babies? They're free. This is us and this is the market. And I was like, um, which one do you want to go with? I kind of like this one. This one here. There's also this one. Although I want to see it, but this isn't violent. This isn't a violent sport. No, it isn't. It's a safe sport. Yeah, you have to learn how to fall. Like this looks painful, but if you re if you're the guy in white, he's gonna get flipped over. Okay, he's losing his momentum. If this guy in white tries to resist falling, he's gonna hurt himself. He's gonna injure himself badly. And it's very symbolic of the market is if you try to fight the market when you know it's going down, you're gonna blow your account. 1 hour fair value gap. Where? This here? This 1 hour right here. Yeah, that Sibi. So again, the other reason why I took this, I reversed it was because I noticed that this five, we came down into this 5 minute fair value gap, and the other thing that I want you to think about is as these candles are forming, as soon as we go to one side and fail to put a body down, we're gonna try to go to the other side, and that's what we did here. And we have to look where do we open up and where are we on this side of the open? Are we in discount or are we in premium? And so I saw that we were in discount and we're flipping over to premium. So I said, okay, let me get out and go in. And look, as you mentioned, we go right to this fair value gap, equilibrium of it. Perfect. So, and look, this is stage one, and here is stage two right here. Boom. Dang, we could have made this one too. Is it too late to get in? Yeah, but higher time frame is bullish. So why are we looking for shorts? We should look for entries. Like right here. This is a good entry. Bullish order block, fair value gap. Is this not a good entry to go long? Yeah. Which OB? On the hourly? Which OB? Oh, oh yeah, the Bissy, the Sibby. Oh, also, by the way, we have 3 minutes left in the hourly session, so this here could be a bullish order block, right? We could come back down here. For us to do that, we need to see some type of uh change in state of delivery. Maybe I don't think we'll be able to do that with this. If this is change in state of delivery, um, and this is that order block on the hourly. Oh, let me get rid of this. People are cutting the grass today. Yeah, this is here. Yeah, it's getting warmer. It's not Florida warm. Um, and it was raining earlier today. So I don't see any projections on the five, maybe on the one, since we do have a 1 minute. Ooh, this looks really nice. Maybe we can come down here and get a long position at the end of this. Actually within here, 2.5 bullish order block here. Maybe we wick down. Maybe we wick down into this hourly order block and then close the body within here and continue going up. How do we get rid of that? We'll see. What do you think? What do you think? But do you understand how I went through this analysis? I did a few things. I have our knowns. We have our low to high, and we have our optical trend entries right here. This is a balanced price range right here. So price can come down to the lowest would be equilibrium, as ICT says. This is also bullish order block, fair value gap inside of a discount. Um, but what, and then we have that hourly order block, excuse me, right here. But what you like to tell me is, Tracy, we're in a premium on the 15 minute. Why are we looking to go into calls in a premium? So this would be like a low probability trade. So that means we're bearish or bullish. Okay. But I'm looking for longs though. Yeah, Look at this fair value gap here. It looks like we're gonna get a body over it. So we're also stuck within the range here on the 15 second. Let's take a look at that. We know everything we need to know about this Fibonacci. Here it is here. Optical trade entry, boom, fair value gap right in here. So we have officially, I think order flow could be bearish to put us down in here where we want to go long. So we want to see bearish order flow. And we have accumulation right here, manipulation, rundown, and it's this fair value gap, and we're still bullish. So all this was just a retracement, looks to me. On the 5, we come right to this 5-minute bullish order block right here, and now we're moving up. So I didn't see that on the 5. Bullish order block here on the 5. And then on the 1, we come to, I believe this is equilibrium of this price range. Yep, equilibrium. That's 2. And then number 3 would be this fair value gap right here, right? That's been inversed. But this is also a 1-minute change instead delivery. If this gets rejected, then we're definitely going to move up higher. But 15 second, we had this fair value gap right in here. We run up into this fair value gap balanced. So this is one of the things that I learned. We come up in here. This is balanced. Now the bears are in charge. Bears need to inverse this fair value gap right here for them to remain in charge. But we come down, equilibrium, and now we go back up. So that means the bulls are in charge. Okay. And since bulls are in charge, here we go, equilibrium of this price leg right here. This is why we always measure our price legs, our knowns and our unknowns. Here's our knowns. Equilibrium, fair value gap, boom, supports. Now we're moving up. See how that works? Ooh, ooh, and it's terminus as well of that order block. Let's take the last one right here though. These two match up together. This is my order block theory. I want to short here. Can I short here? Do you want to short here with me? Here, look, these match up perfectly. You don't want to short here? This is inverse. Why don't you want to short here? Those little 15-minute projections I had there. And then, so we have to wait another 5 minutes for this to close, and then we'll get our changes that delivery. It won't be this, but so if we have a minute left in this 5-minute session, so you're saying that we have to close below here with this candle for us to have a change instead of delivery? This one right here. So change state of delivery, it has to be it has to be a close below the up closing candle in premium for a bearish change in state of delivery. Oh, right here. So that's this one right here. No, no, it isn't. Market structure. So here on the 1 minute, this is a 1 minute change in state of delivery because we closed. Okay. I'm just curious. Four is not here. I like it on the 5. I like this here. Run up, stage 1, run up, stage 2, run up, consolidate. We should get reversal or continuation. So we have to consolidate before we get a reversal or continuation. Hey. So coming in on the day, Edeline, coming in on the day. This is what you said, but you didn't say it out loud. It's I expect accumulation within this fair value gap here on the hourly. Or it's I expect the market maker model, buy model, to end in this fair value gap up here and get accumulation. You see all the possibilities? You said it, you just don't remember it. You didn't say it, but the way that the way that you went through this analysis up here, like I'm just showing you that that could have been done at the start of the day, and we could have just put like a sticky note here. This is what I expect for a price to come right here. And therefore, we're developing our anticipatory skills and we're looking at the chart for specific things to happen instead of just looking at it blankly like how I would do it and see, oh, this bar is coming down. Now let me go in for a short. This one. Yeah. Yeah, it was external. Yep. Right, because we go from external range liquidity to internal range liquidity. Yeah, good, good. I missed that play. I didn't see that. Yeah. Oh, right here, right here. Hmm. Right. And also, we came to this bullish for the black right here, and we went up. My question for you, my question for you is, if we put a body over this on a 5 minute time frame, does that mean we officially close over this? Because this is an hourly fair value gap. So we don't have any on a five right here. So does that mean we don't rely on the five to determine if? Okay. So if we're still bullish, we should be looking for a retracement leg, right? Oh, so what you're saying is unless until we consolidate, we're still bullish. Ah, hey, hey, hey. Okay, okay, okay. Yeah, I'm learning, right? Because all these retracements, oh, it's bullish. I mean, it's bearish. No, it's a retracement. It's still bullish. It's just a retracement. And higher highs. And these black candles are propulsion blocks, right? So you come down here, propulsion, come down here, propulsion. That's why I have from this low to this high mapped out. And here we have our equilibrium right here. Here we have a small little fair value gap. So this is sell side. No, I'm not. No. So, okay. We have an inverse right here, balanced price range. Bodies failed to close within it. Let's see. So are we gonna take this one together? We also have model 14 right here. This is model 14. See that? Perfect. So we should be short here. Come on, log in, log in, log in, log in. Oh, you use the desktop application? Oh, I should probably do that. Oh, you never got one of those Top Step X accounts? Okay. So we have this this Sibi here, or this bull shorter block here. This could just be a propulsion block that we're, looking at. Um, because we do have this fair value gap right in here that and this is also discount, right? So what we want to see is these bearish shorter blocks here become propulsion blocks, and this is what I have to do a better job at. Propulsion block right here. Let's see if this is the case. Um, I think we're waiting for the 5 minute, right? 5 minute change in state of delivery, and then every move into here will be an entry like a propulsion block. But we haven't gotten the 5 minute yet, so I guess, and we're closing above this, so and then we're in a new 15. Um, we're in a new 15 right now, so maybe this was just a retracement of the previous 15. time frame. But let me see if we get a five candle run here. One, two, three, four. This will be the fifth one on the 15. Hourly, still playing around with this fair value gap here. We have some buy side up here if we can. Yeah, so we're probably gonna blow through that. For short, probably, maybe. I mean, we can wait for those highs up there to be taken, but I want to see, this is what I want to see. So we're at Q3. So this is a 90-minute quarterly shift. So it's valid to look for a short position, but again, like you said, higher time frame, we're still bullish. And then we failed to displace below these lows here, and now we're running up into this. What is this? Oh, this is the propulsion block, right here, propulsion block. So let's see what happens. Now we're stuck between this range here. Let me get rid of this. Um, okay, so now we're back in discount. Actually, I got this wrong. Should be high to low. Yep, so still in discount. Let's see what happens on the 15. What do I want to see? I want to see a premium PD rate be respected, like this fair value gap here. This is equilibrium above this red line. Um, this looked like that was inversed. So let's see what happens with this one. See if this remains open on the 15. Okay, I think we can short this. Oh, mm, 2 minutes and a half left. What's giving us trouble is this, excuse me, is this bullish order block right here. That's what's giving us trouble. And what might turn out, we just might be consolidating because it is 11 and we just had run up, run down, run up, and then looking at the five, one, two, and then we. So this is it here. No. So premium, still within premium, but where's that quad? I think this should be the range that we're looking at. We're still within a premium. Now we're just consolidating. What else? What else? What else? What else? What else should we be looking for? Hey, I told my mother that this morning. So I got a partner. My mother, she's doing fine. But I told her that I have a partner, like a trading partner, you. Yeah, so 55 seconds left, so we might get to change instead of deliver here. Oh, you know what I should do? Or what we should do is mark this out. So we have another propulsion block right here. Let's see if this one holds. Looks like it won't. This propulsion block right here looks like it doesn't want to hold. And also we're still fighting with this 5 minute uh bullish order block right here. So this might just be consolidation. Go ahead, say it. I'm listening. Go ahead, tell me. Tell me. I know you want to say it. I know you want to say it. Go ahead, say it. Say it. Okay, you want me to say it for you? Okay, I'll say it for you. This is why you wait for confirmation. Now I'm learning it. Do you know how many trades I would have taken in this? Oh, we're short. Yeah, yeah, yeah. Oh, now we're long. Oh, go back in. Oh, now we're short. Oh, not. Next thing you know, account blown. And look, and I had this earlier. I had from this low here to this high here on the 1 minute time frame. And look where we go to. We go to optical trade entry right here. Optical trade entry right here, but this fair value gap, D man. I hear you. And to be honest with you, to compliment what you said, we don't need it. We do not need this SHIT right here. We don't need this because we already took this one, we took this one, and we took this one. We don't need this. So so if you want, we could just leave and come back for the afternoon. Unless okay, fine. Let's do that. I'm gonna go for my morning walk. Uh 2 p.m. 2 p.m. Okay. All right, take care. All right. Bye-bye. You're welcome. Thank you. Okay. I'm gonna upload it and then I'll send it to you. Yeah, that's what I mean. I don't know. I'll send it to you. But look how this 5 minute change instead delivery. Bull shorter block is holding. Bodies are holding it. But whatever. We're trying to pinch pennies right here. All right, cool. I'll talk to you too. Thank you. You did too. Thank you. All right, peace.